Robschild, no investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Thursday, January 30th, 2025. Today's episode, the GDP quarter four first estimate came out. I'll note here I was right about the Q1 being on MarketWatch. Everyone uses that and the CME Watch tool. I'm always amazed to see huge errors on these websites that so many professionals use to, keep track of what the heck is going on. But anyway, yeah, it was quarter four, like I have been saying, and it came out at 2.3%, well below expectations. Expectations ranging from what I saw between 2.5% and I saw some as high as 2.7%. I'll add to this that being 2.3%, this is only the first estimate. We have two more revisions coming, and those revisions could put it below that very important 2% number. When we're below 2%, that's when markets typically get a little bit scared. What do you mean below 2% GDP? That's like a red flag for most people. Slightly above 2% as it is, it's a little bit of a Goldilocks number, but it's, inflation still isn't down to the target, and the Fed just came out as being slightly hawkish. They probably had this number before we did today. And so the situation we're in now is kind of just like sit on your hands and wait to see what happens next. This number coming out, I thought may have had the potential to rock things around. It really didn't. Most markets just were continuing on their merry way in the same direction that they had been going. Again, generally speaking, anything positive, especially above 2%, is generally it's not very meaningful information. The kickers are when you get the negative GDP, especially back-to-back quarters. As you can see, we had negative 8.5% in quarter four of 2008. Before that, negative of 2.1%, and even the first quarter of 2008, negative 1.7%. And then for the dot-com bust, although that was a pretty bad bear market, there was only two of these little negatives here, 1.3% and 1.6% negative, surrounded by some fairly low numbers. It's important not to confuse GDP with other numbers. GDP being, if it was very strong, it isn't necessarily inflationary. The better inflation gauges are going to be CPI, the PCE index, and then the 10-year break-evens. Those are the three ones to really watch to see where inflation is and may be headed. Next on today's agenda, I wanted to bring up China. I wanted to bring up China today largely because of this chart pattern on KWeb. My favorite. It's been my favorite ETF for a long time. I'm finally hearing bigger YouTubers than me talk about it more and more. This is, again, the fund that holds Alibaba, the Facebook, Amazon, those kinds of things, but the Chinese companies of those. We recently had a breakout from this wedge, and if you guys remember, back in September, we had this specific fund, KWeb, go from a price of $25 all the way up to $40 within a week or two. This was off of the news that China was taking out a stimulus bazooka and going to make things, really great. And, that's great. But, it faded here, and we've been going down for a while. I think part of this is the fear of the Trump presidency, maybe, trade wars between the U.S. and China. Trump talking about tariffs, over and over again. And we've broken a pretty psychological trend line from that previous high to the next high. We broke through it with a large green candle today, after this has been going up really ever since his presidency began. I think part of this was the market was honestly scared of Trump on day one saying, okay, we're going to tariff, China an extra 50% on everything, and no, he hasn't said really anything about China. And I think that, again, as I've said before in previous shows, I think this has to do with the money people coming out and telling him, like, hey, be careful here. Tariffs are, they're typically inflationary. And if you're going to start this, we're already having to fight inflation. And so this might not be the time to engage in that kind of behavior. And yeah, we haven't seen it. And so since Trump started his presidency, I don't think it's a coincidence that this fund has gone up significantly and seems to be gaining strength and momentum. I'm curious where this will go. Again, my perspective is that the value of this fund is likely around, $50 a share would make more sense to me. It at the current price is still like so dirt cheap that, I think Benjamin Graham would maybe have 30% of his portfolio in something like this at this moment. So the chart looks bullish. The worries are dissipating, and K-Web is being, has I've talked about forever. China, because of the PE ratios being so incredibly low, feeling like it's a balloon being held underwater and just being allowed to rise to the surface, or at least rise a little bit. $50 a share to me is still underwater. It's not up to the moon like the US stock market is right now. So anyway, moving on, last item on the agenda, just wanted to bring up that tomorrow we do have PCE data coming out. This is an inflation gauge. This is known as the Fed favorite inflation gauge, the personal consumption expenditures. If this is low, then, stocks will go up and yields should go down. So bonds should also go up. If it's high, stocks will go down probably. Bonds will go down a bit. Yields will have to be going up a little bit. But if it's like extra low, then that's the case where that's when the market will be like, uh-oh, why? What do you mean it's like lowered? It's like so low that prices are actually going lower, that, sniffing out at some deflationary forces. And that can send bond yields down, bond prices up, and stock prices down. So, it could be eventful. Again, I thought this GDP report was going to be more eventful, and just yet another nothing burger. I have no major updates to the daily reminders. Watch Macro Update 11025 with Dominoes in the Crystal Ball to hear me read through these extremely important daily reminders. After today, I have less of a reason to do another macro update. I imagine I'll do another one when things start getting frothy, when things start really getting exciting again. Things have been kind of boring. Besides the DeepSeek, apparently crashing the stock market for a little bit here. Nothing, no real updates. Also, no updates in the Crystal Ball ratings, nor the Robschild portfolio, which I read through on that same macro show and explain. On to some charts. The S&P 500. It's not interesting. I only bring it up because it's, it has traditionally been the best indicator of global liquidity, and now apparently Bitcoin has beaten it. If you've seen Lynn Alden's work, it's has actually a higher correlation. But still, this is like when you think stock market, that's why I always start with the S&P 500. We're just going sideways. Mr. Market doesn't know where to go right now. TLT, my favorite place to be, still looking bullish. Again, head and shoulders here. We broke through, and it looks like it wants to keep going higher. Tomorrow's PCE data could, continue it on its merry way or send it the other way. Its upside down cousin TNX, the 10-year Treasury yield, also dropping today by 1%. I don't love saying percent when it's, it's a percent of a percent. So, if it goes down by 100%, but it's from 1% to 0%, it's like, yeah, anyway, in terms of actual yield, we lost 0.045% yield. Still looks like this head and shoulders wants to play out there, but we have some significant trend lines. These yellow trend lines representing simply these bottoms here starting in September 2024. And then the other line is the epic one going all the way back to April of 2023, forming what I thought was a head and shoulders top, and then retesting it. And I thought for sure we would have headed lower, and we didn't. We broke back above it. But if this plays out, if this head and shoulders top here plays out, then we'll actually get below these two previous trend lines, which I find interesting. Oil continuing to look, it's a green candle. It went up, but it was within yesterday's red candle, and it's still well within, this, downward channel. Don't know when it's going to stop. Typically a channel going down like this wants to, eventually break to the upside, get to like maybe a mid-range before heading lower. If, that would make sense to me. Dr. Copper with a PhD in economics, not looking extremely bullish or bearish, just kind of wanting to go sideways, kind of just sitting on his hands, waiting for, some real information to come out before Dr. Copper decides what to do next. But looking at the other metals, we can see silver got a pretty good bid today. The next candle already started because it's on UTC time, but went up by 2.6% today. And then gold also having a monster move today. And I call it a monster move. It's only 1.23%, but, headed straight into the double top. We are at all-time highs, by the way, right now in the price of gold. Some people are speculating that, if we break above this double top and get a confirmation candle, the next stopping point will likely be $3,000 an ounce for gold. Again, the PCE data tomorrow could affect this. If PCE is very low, then, there won't be as much of a worry to be buying gold. Gold is the ultimate, fear of inflation gauge. When gold goes up, that's really the best way to look at it. When gold is going up, it's saying people are scared of inflation moving forward. And remember, markets are always forward looking. And when gold's going down, it means markets are not worried as much about inflation. This market has been and continues to seem very worried about inflation. I consider personally that the 10-year break-even inflation rate is a smarter market than the gold market. Gold has had plenty of bubbles and plenty of busts, while the 10-year break-even inflation rate doesn't, it's not so emotional, and I just like it better as inflation gauge. And I want to note today that since going sideways since the beginning of January, we've hit 2.38, from January 7th, 2.38. We hit it again on the 21st, and then again today, 2.38%. And so we're kind of knocking on, the way I see it, it looks like it wants to actually go down from here. Again, PCE data tomorrow and these charts. It could be interesting. I keep thinking it will be interesting necessarily, and it won't necessarily be. It could just be another boring nothing burger, and we'll see. Last chart I wanted to bring up today is Bitcoin. This is a bull flag here, and it's looking like it wants to go up. So Bitcoin, the buyers of Bitcoin they look strong right now. This pattern playing out to the upside should get us to around the $115,000 level if that occurs. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching. Thanks for all the support. Thanks for the likes. Thanks for the donations. And thanks for everything. I enjoy doing this very much. And we'll see you next time. Robschild.